Hey guys, welcome back. Yassine here. It was a really rough week. I definitely got hit in my portfolio from the growth stocks. I got out some positions. I'll mention some of them later in the video. But one thing I want to mention is, like I said before, if you're new to the market, I made this YouTube channel just to educate people, give them like a little heads up, and then helping as much as I can. So I said, just watch the moving averages. If the stock is it starting to close below it, or is it above it? You'll notice that this week SMH and growth stocks got hit, and then the moment when I noticed that. You can notice this trend line right here. I'll put it in blue or green, for example. Let's put it in red just so you can see it. The moment I saw that we're starting to get in the way, look how since the follow through day on April 6th, if you drew this red line, you'll see every time we kind of respect it. Every time we go above it, we pull back. Every time we pull back, and then the moment I saw that the stock, let's say you'd even notice that. Let's say this one. So this could be like next time you can put that in there. Like when you see a stock trending higher and then retesting and touching some resistance, you want to keep an eye on it. And another thing you want to keep an eye on is every time the stock or the index starting to get away from that 21 moving average, you want to keep an eye on it. Like you want to be careful. That's caution, because it can snap on you anytime. But what I really did watch is, when we're starting to close below the 21 on SMH and QQQ, when we're starting to close one day is not a problem, because you can see here 1 day and then 2 day. Here I was kind of cautious a little bit here. What do you do when you're cautious? You kind of you reduce your positions when it comes to that sector. So if you're holding the stock on that sector, you want to watch it. Like here we closed almost 3 days. You want to be cautious here. Anything can happen. But again, here you could be cautious, and even if let's say I reduce my positions here and we rallied again, that's fine, man. I mean, like I said, you're never gonna catch anything. Like if sometimes I'm up on a position like 50-60%, and then the stock just dropped and you're down like half of that or something. Like let's say I'm respecting, like I said before, I'm respecting my moving average. Every time we close below them, I take some profit, and then you're up 60-80%, and then the stock just dropped on you, and then you lost 20-30%. That's fine, man. Just take whatever you're never gonna catch the top, you're never gonna catch the bottom. If you have rules, you're gonna stick with it. One thing I learned though is there is no such rule. Like I spend countless hours, man, just trying to find the rule that like every time you look at the stock, this happened, and like it will work for 10 stocks, and you move on to the next 10 stock and it won't work, because it's different market, different environment, different sectors. So it's always like market's gonna bounce you back and forth. But if you have simple rules, it will work. It will work as long as you respect and you have the discipline to stay with it. And market is always gonna mess up with your psychology, man. It's like, no, and I should have sold here, should have bought here. No, if you buy breakout, stick with the breakout. You buy pullback, stick with the pullback. If it doesn't work on next 3 trades, it's okay. Just keep sticking onto those buying points in your system, but don't bounce. So that's one of the things that I learned. Sorry that I went for a little more, but anyway, so the stock SMH closed here first day, and then I saw that green candle, and I'm like, whoa, that's a good pullback right there. But as soon as we kind of close below here, man, that was like a warning for me. That was warning. I wish I would have taken more profit on this side on the stock that I was holding, but I kind of hesitated a little bit. I had some more profit, but like I said, I always respect my rules no matter what. Sometimes we don't, but sometimes market will humble you, and they're like, hey, you don't respect the rules, I'll show you what the rules are. And so right there, when we close second day below the 21, and after that's like more meaningful to me. Like when we made an attempt to bounce, and we kind of eliminate that, and then we try to get up here, and then we kind of eliminate that here. And so that for me, that like, yo, something's happening, something brewing. Money is rotating. I'm still bullish long term on the stock market. You tell me why. I'll say QQQ and SMH are getting hit. They are below the 50. Like I said before, keep it simple. below the 50. You look at the SPY and the Dow Jones, they're not. They're still holding. SPY is below the 21, but it's holding above the 50. You look at the Dow Jones, ETF for Dow Jones, it's holding above the 21 and it's above the 50. You look at IWM. So you go and visit all these ETFs and you or indexes, and you watch what's happening, where the money is. And then IWM is still doing good. Energy sector is still doing good. XLF is financial stock market is still doing good. And if you notice, like you will notice that right now all the stocks that went up on an uptrend like that, now they're starting to break. And they're working on the, let's say this is a company handle, they're working right now, they're on that phase where they're working on that left side base. So you want to give them time before they even set up and go up higher. One of the ETFs that really had a great run was actually the ARK. One of the things I want to share with you, I think I mentioned this before. When you see, this is one of exhaustion. When you see a stock that it's been respecting that resistance over and over and over again, here we kind of corrected, and then you can draw another one again here. You see it? So let's say this one's over because we kind of corrected it, and then you hit once here, and then twice here, and then 3 times here. So we kind of, every time we hit it, we kind of pull back, and then you see this exhaustion. This is like a warning. I've seen this happen back in 2018. Every time you see that and you watch down here and you look at the volume, the greatest ever, you look at to the left, the greatest volume ever, that's exhaustion. That's the market's telling you, like, hey, this is the last run. It gives you a warning. And then so when you see this angle right here, of this trend right here that I'm drawing right now, the angle, so we want from this angle to this angle right here, right, like that. That's not sustainable. So that every time you're moving up almost on 90 degree, that's gonna smack you right back in the face. So those are signs sometimes I watch on a late bull market. That happened. If you look back on a SPY and some index and some stocks on 2018, that's what happened. So that's a little side thing I want to show you. So market's still bullish long term. Growth stocks, they need some time to consolidate. They need to make some bases. But like I said, some of the stocks are still doing good. One thing I want to share with you, and one thing that I learned, and I made a mistakes back then. I was screening every day. Even though I was putting stocks and I share with you my ideas on stock tweets and Twitter, my problem is like something that I fixed is screening every day. I was not screening every day. Now for the last 2.5-3 weeks, I've been screening every day. That's the first thing. Second thing, I wasn't including. I'm still like solely basing my buy and sells and exits on the chart itself, but I was not including fundamentals when it comes to stock selections. So one thing I want to share with you is like here in IBD, if you have membership with IBD, I'm not sponsored by IBD or anything like that. I'm just like to share with you whatever I know. So I look for stocks that have relative strength down here to the left side. I don't know if you're watching my cursor. I want to see stock that 50%. So I'm looking for a broad range of stocks. I'm looking for the new leader. 50% relative strength minimum to 99. I want stocks that above $10. I want stocks that usually I just tweaked this. I had like 200,000 shares a day traded. So I kind of sometimes I tweak them. So this is like 150,000 a day. I want last quarter sales to be 25% and higher. Last quarter EPS change 25%. Current quarter EPS estimate 25%, and current year EPS change 25%. And then it should really give you a good list, and you have to go and look at the stocks and this list and then put them on the chart and then see what's good for you. One thing, so I wasn't doing that before. Now I'm putting a lot of attention to it. So I came out to couple stocks I want to share with you that they're brewing, even though the market's taking a hit. But like I said, it's taking a hit on the growth stock. There's value stock. That doesn't mean I'm going to shift my energy to the value stock. But hey, if a stock has a good fundamentals and a great setups, guess what? I'm gonna jump on it. But at the meantime, the growth stocks are still like taking a hit. One stocks that came out into my watch list is KE. So KE had a composite rating 90. You can see these lights in here. Green is good, red is bad. One thing that I watch usually is the APS last quarter. This is 131%. APS estimate change current year is 86%. That's a plus. And then sales growth not that great. But if the stock has any one of those, that's a plus. If it has both, that's even better. So I go back to the chart and I put KE and I look at the stock. So I put first thing I do, I go to the monthly and I look at this is a new IPO. This came out back in 2014. It's not a new IPO. It's been more than that. So look at the stock on the monthly. Look at the volume. So the chart will speak to you. Will tell you what's happening. Now then, I go to the weekly, and then I see this downtrend here. 1, 2, 3. So we kind of broke it on kind of decent volume right here. So things I'm accumulating, things I'm in my head, and I'm seeing like, hey, what's happening? And then when I see that, like, okay, everything's bullish, those boxes getting checked. We have a decent fundamentals on APS, and then I move on to the daily. And now I'm looking for what is this stock is doing on the daily. Is it giving me any good potential entry? How's my risk? And I'll see one thing I do actually, and I look for relative strength. So if I go to the SPY, for example, and I look, okay, when did the SPY or the other indexes was getting hit? So I'll look at we'll find that February 25th, the SPY was starting to close below the 21. So this was when the really correction starting to happen. 25th, and then 26th, and then you have March 3rd, March 4th. So these are the days I want to compare them to KE, whatever stocks you're watching, and then I'll go, okay, February 25th. So it was that day right here, that red day. Though this one took a hit, but never closed below the indexes closed below the 21. This one did not. And then you have March 3rd, which is this day right here, and then March 2nd. This one actually did held good, and then you go from there, and then it gives you an idea. Okay, is this one good? Is it not? Is it or is it not? And then one thing that I noticed is we have this. Somebody's screaming. The stock is screaming at you with these gaps with a huge volume. Hey, this stock is really good. So I'm not recommending. You do your own diligence. I'm just showing you my new screens that I add fundamentals to, and I go from there. Another one I want to share with you that I found with that screen is called SMPL, Simply Good Food. Composite rating is 88. It's number one in the group. If I noticed, like when I started looking at the charts along with the fundamentals, I started to see that these stocks are kind of ranked number one in the group. Even though this one actually with IBD they recommend that. See, you see it here on the red. They recommend stocks that are on the group A and B. But hey, market is rotating, so whenever I see good fundamentals and good shut-ups, hey, guess what? I'm gonna jump on that stock. And excuse me. Next thing I'll watch is how the EPS of this stock did on the last quarter. 32%. It's above 25%. That's pretty good. 3 years EPS growth rate 194%. That's decent. 15% not as great. Sales growth last quarter, that's 52%. Last 3 years sales growth rate is 31%, and annual pre-tax margin is above 10%. So those are decent number. They're not great, but hey, they're this decent number. And I'll come over here and put SMPL, and then again I'll go on the monthly and we'll see what's happening. Stock had a great run, broke out right from here, and then It went, I think it went from like 15, like, yeah, to $30. So that's pretty good. And then we had a resistance here at a 31.35. Another resistance pulled back. Another resistance will pull back here. Moving down to the weekly. This is my analysis. This is how I look at the chart. And then I see that the stock pulled back when it hits that resistance. But I go like, okay, how much did it pull back from that resistance? Did we pull back like from here and then we close below that breakout candle or not? Because you can see, I can tell you two ways that this stock had an inverse head and shoulder. You'd be like, okay, what is it? You'd be like, okay, this is the left shoulder, this is the head, and this is the right shoulder. Or you can flip it and you go like, this is a cup and a handle right here. So this is a base, this is a cup, and this is a handle. Even though this handle is kind of like a little deep, I like to see it tight here, the slow, light pullback, but it's okay. We had a great volume. We have a great breakout right in here. And like I said, we kind of touched that previous resistance, but we didn't pull back all the way down. We kind of pulled back about 50% of this move, which is still healthy. And then we kind of went sideways for weeks now. Now I move on to the daily. And I'll see the stocks still holding that 21 and then the 50. And you'll be like, okay, what did the stock did when the market was red, was bloody? 25th on Thursday, so it was this day. And then March 3rd and March 4th, which is here and here. The stock still held its ground. And it's still building that higher lows in here. So, and then I go from there. And then I keep checking those boxes. Another one that I kind of liked when it comes to the fundamentals is Valley, V-A-L-E. Composite writing 99. Again, notice they all ranked 1 in the group. All green lights, which is gives me confidence already. We had a good choice. And then we have EPS due date was on the 26th, so we still have like a month, almost like a month and a half. EPS last quarter changed 147%. Anything above 25%, that's pretty good. EPS estimate for current year is 286%. Sales last quarter is 48%. And that's it. Is it okay? I think it's really good. When it hits like, when the stock hits like two things, you have the EPS and you have sales. You got yourself a good choice. And then I move on to the. So we got the fundamentals checked, and we're gonna look at the chart, which is like, if I had great fundamentals, man, the chart looks like crap. I'm not gonna even look at it. Moving on to the monthly. This is the monthly chart. So the stock already had a previous highs way up here, $40 it kind of based in here. And so the stocks, so when I see things like that, so I'll know that the stock's gonna have some resistance along the way. So when it comes over here, you always want to watch the left. If you're the type of the guy who's gonna take target price, so you may want to watch those resistance like here and here. So you may want to watch that. We had a resistance way up here too. So I will know in the back of my head, like, this is not a free line when the stock has no previous resistance like S&P that we talked about before. So this one might have some difficulty. It might not. So, but again, I always keep that in mind. It's like, because when the stock doesn't have any resistance to the left side, it's free. Like, it can fly as high as it can. Moving on to the weekly. Look at that volume that caught my eye right on the breakout right in here. So that's a good volume on the weekly. And you can see that the stock had some previous resistance in here on this side. We kind of broke it. Like, we didn't even consolidate right below. We just went right through it. That shows me strength. And then the stock just held sideways. And then I'll be like, okay, looks good so far. And then I'll move on to the daily. And then I'll be watching, okay, what did the stock did when the market was getting hit? Again, you can pull up, either you can do, you can go to TradingView or whatever chart you're looking at, and you can put the SPY right next to this. I think I can do it. It's just gonna take some time and just, anyway. So you look at. So we said that the SPY and other indexes start getting hit on the 25th, and you look at the 25th here. So this one took it was a red day, not a bad, but this one starting here, we will start to get hit. but it did held its ground on the other days. Next, we went sideways, so that kind of showed me some good relative strength comparing to the whole market. And I see that the stock started getting tight here. That's another thing. VCP pattern, whatever you want to call it. I like this last day because we kind of opened lower, 1712, and we closed higher to the top. We closed high was 1775, and then we closed 1774. That showed me strength right there. We're starting to close below that. Forget about the stock. We're starting to close below that. Forget about it. It's something else brewing. So I'm watching that trend line in here. You can wait, you can do whatever you want. I'm just showing you what I'm finding within my new screens and what's holding, what's not holding. So these are great stocks that I did found, along with other many that I did found. But I'm always like for example, the stock that it has no fundamentals, believe it or not, it was Lyft. I was gonna jump on it, would just put 40 shares in there just to see what's if it's working or not. But believe it or not, the stock, even though it did hit we break that previous resistance here in here, and it just what struck me is like the stock, it just went sideways, and it doesn't even have the great numbers on the fundamentals. It just went sideways. So something else that somebody knows that I don't know. Yeah. So Lyft and other many stock, LIND, another one that I found. I don't know if it does have, I think, good fundamentals or not. Let's check. LIN. There's so many that I found I haven't even gone through. This one just pops out in my other screens. This one, not as great. Yeah. Annual return. Yeah, look at that. That's not as great as I wanted. Sales, everything is a negative, but the fundamentals still in there, you know. I mean, the technical is still in there, but the fundamentals, nah. So yeah, so this is the thing. Before I used to look at the technicals more than the fundamentals, but like, hey, if I have a choice between, like for example, with LIND and Valley, even though this one really had a good run, like, hey, I would of course I would now I changed my mind. Like, of course I would change. I would go with Valley if any one of them broke out, or like my buying point, or triggered my buying point. So yeah, so Valley. KE and SMPL, those are the stock that I found, like I said, plus many other. I hope this video gave you value. I hope you find value in it. If you did, give me a like, subscribe to the channel, and if you have any questions, post them down there, and I'll see you next time. Take care, bye.